Hello and welcome to this short presentation on ACCA F2 Accounting for Labour. My name's Andrew Mower and I am a tutor at Kaplan Financial here in London. Okay, we're going to cover 5 things today. First of all, we're going to look at direct and indirect labour and how we account for each. Then we're going to move on to different ways of paying our staff. We're then going to look at labour turnover and some labour ratios. And finally, we're going to look at how to answer the exam question. And we're going to use a really difficult question that the examiner set and work through that together, so hopefully that makes it a lot clearer for you. So first of all, we're going to look at direct and indirect labour and what the differences are. So direct labour is made up of your basic pay. So that is the labour that's gone into directly making your products. And that then is made into your prime cost along with your direct expenses and your direct materials. And they then go into your work in progress, commonly known as WIP. On the other hand, we've got our indirect labour. And this is made up of things like your sick pay, idle time. So if you've got a machine that's broken and your staff can't work, that is called idle time. You've got your bonuses in there as well, any bonuses you pay your staff in the period, and also any overtime premium. So that little extra bit that you need to pay your staff if they've worked overtime. So say, for example, you usually get £10 an hour, and then if you work overtime, you get time and a half, which is 50% extra. That extra £5 you're getting for overtime is included as indirect labour, unless that is that your customer has specifically requested that you work that overtime. Now, these indirect labour costs then go into your production overheads, so they make up your production overheads. Next up, we're going to look at different ways of paying our staff. So first of all, we'll look at time-based payments. So this is what you're used to, so maybe staff getting paid per hour and then getting a slight bit of overtime if necessary, or maybe an annual salary or a weekly wage. So that is, the more time they work, the more they get paid. On the other hand, you can also use these output-related systems, which are linked to how much our staff are producing. So they get paid per item produced. And there are a number of ways that you can pay your staff in this manner. So the first way is called straight piecework, and this is literally the more you produce, the more you get paid. So if you produce 0 products in the period, you won't get paid anything. Now, I recently went on holiday to Crete last year, and we were in Lidl. A few friends and me were in Lidl, and the cashier lady, I think her name was Matilda, she was scanning items so quickly that we couldn't actually get them in the bags quickly enough. So there were 4 of us there having to try and catch things in the bags and get them into the trolley as quickly as possible. And we thought, why is Matilda scanning these items so quickly? And then we found out later that in Lidl, in Crete, you actually get paid per item scanned. So the more things that Matilda scans, the more money she'll make. So the next person would then come along. We hadn't even finished packing our bags, and she was already launching their eggs into our shopping bags. So that is being paid per item produced or per item scanned in Matilda's case. However, it might be a little bit unfair if it was a very quiet day out in Crete and Matilda didn't get any customers in Lidl. So you can also incorporate this idea of piecework with a minimum guaranteed daily wage. So maybe she'll get a minimum of 25 euros per day, and then say over 4,000 items scanned, she'll then get paid per item scanned as well. So she's not going to go home with nothing, but still there's a bit of motivation for her to scan as quickly as she possibly can. Another way of paying our staff, depending on the output they produce, is called differential piecework. Now, maybe for the first 1,000 items you produce, you'll get paid 1 cent per item. For the second 1,000, you might get 2 cents per item. And then from then on, you may get 4 cents per item, just an example. So the more you produce in the day, the more you're going to get paid. So it provides a nice motivation for your staff to produce things as quickly as they possibly can. So there are different ways of paying our staff. We're now going to look at labour turnover, which is how often our staff are turned over, how often they are getting replaced within our business. So the way to calculate this is to take the number of leavers in the period that require replacement. So if they've been made redundant and the staff numbers have been reduced, we don't need to consider them. It's only staff that require replacement, divided by your average number of staff for that period. And to calculate your average number of staff for the period, you just take your staff at the start of the year and your staff at the end of the year, add them together and divide them by 2 to get your average number of staff for that period. Times that by 100, and then we get this percentage labour turnover. So as an example, if 300 people have left our business in the year and require replacement, and we've got 2,200 staff at the start of the year, and then 1,800 at the end of the year, if we take the average of the start and the end, that comes to 2,000 staff we've had on average during the period, and 300 staff have left. So what we do is we do 300 divided by 2,000 times by 100 will give us a labour turnover of 15%, which incidentally is about the average for the UK. So 15% is about the average. It varies from industry to industry. So things like retail and catering, you tend to see a bit of a higher labour turnover, whereas education and accounting, so the professions that we're in, hopefully you'll see a slightly lower labour turnover, which hopefully is good news for you guys. Okay, next up, we're going to look at labour ratios and different ways that we can analyse how our staff are working. The first ratio we can look at is labour efficiency. And now to calculate your efficiency, what we need to do is take our standard hours for actual output. Now these standard hours are how long it should take our staff to produce that output. So if they've produced 1,000 items and we predict it should take 2 hours per item, that is going to be 2,000 standard hours. So how many hours we expect them to take to produce the output they actually have. We then divide that by the actual hours they have worked and then times it by 100. So if they've been efficient, that number will be above 100% because they've taken less time than we had anticipated. The second ratio we can consider is labour capacity, which is our actual hours worked divided by our budgeted hours worked. So this is also known as utilisation. So how many hours we budgeted for a staff and how many they have actually worked. So if they are utilised over 100%, that means they're working really hard and working longer than we had initially anticipated. The third ratio is known as your labour production volume, which is essentially an activity ratio, looking at how hard we want our staff to work. So it's how long we expect them to take for their actual output, which is their standard hours again, this time divided by the budgeted hours. So it's how long they should take divided by how long we have budgeted for them. And again, times that by 100 to get your percentage. So they're the three main labour ratios you're going to need to know for your F2 exam. What we're going to do now is look at this past exam question that came up in 2009 sitting. Now the examiner said that not many students got this question right. So we're going to work through it together today and hopefully make it a little bit simpler and easier to understand. So then if a question comes up in a similar nature in the future, you guys will know exactly how to answer it. So the question reads, budgeted production in a factory for the next period is 4,800 units. Each unit requires 5 hours to make. Labour is paid at $10 per hour, and idle time, remember we talked about idle time earlier, represents 20% of the total labour time. And they want us to work out what the budgeted total labour cost is for the next period. So that's the question. Now we're going to look at how to go about answering that question. We know that we've got 4,800 units, and they're going to take 5 hours per unit. So therefore we are budgeting 24,000 hours in total to make these units. However, that is without any idle time, and we still need to pay our staff for their idle time. It's not their fault if they're in the production line and something goes wrong in a machine, or they're waiting for someone else to complete a task before they can carry on. So we need to still pay our staff for that idle time. So we need therefore to think about those 24,000 hours and how we can gross those up to include that idle time. So we're told that idle time represents 20% of the total labour time, which means these 24,000 hours are only 80% of the time that our staff have actually worked. So in order to get our total number of hours, what we need to do is we need to take our 24,000 hours, divide them by 0.8, so divide them by 80% to gross them up to our total labour hours worked. So if you do that calculation, that then comes out as 30,000 total hours. It then says in the question that we're paying our staff $10 per hour, so we do 30,000 hours times $10 gives you $300,000, which is answer D. Now, a lot of students didn't get answer D for a variety of reasons. We'll look at some of those reasons now. So common mistakes that you need to avoid if you see a similar question in the future. So a lot of students multiplied rather than divided by 0.8, which would give you answer A. So the examiner doesn't just pick random answers out in the A, B, C and D. The other answers are being calculated so that if you do make a mistake, the option is still there. So you need to be careful of that. So A is multiplying rather than dividing by 0.8. So we've just seen why we need to divide, not multiply. Answer B doesn't include any idle time. So all they've done is taken $240,000, which is incorrect because we haven't included any idle time. And the most common answer was actually answer C. So the students who have picked answer C have got the idea of needing to scale up the number of hours worked, but instead of dividing by 0.8, they've actually multiplied by 1.2. Now that isn't the same thing, so you need to just be careful with that. I've just given you an example here. If you take 100 and divide it by 0.8, you get 125, whereas if you take 100 and multiply it by 1.2, obviously you get 120. So these are different things, and you just need to be careful that you're doing that the right way around. So hopefully that's made that question a little bit clearer, and if you see that in the future, you'll know how to tackle it. You can also consider this type of question in budgeting questions with materials. So if material wastage is 20%, then to get our overall materials that we need to use, again, we need to divide by 0.8 to scale it up. And similarly, if wastage is 30%, or if idle time's 30%, we need to divide by 0.7. If it's 10%, we'd need to divide by 0.9. So hopefully that's a bit clearer and you get the idea of how to tackle those questions. Okay, so just to wrap up, we have now looked at direct and indirect labour and how we can account for each of those. We've looked at different ways of paying our staff, both time-related and output-related. We've looked at labour turnover and how to calculate labour turnover using our equation. We've looked at the 3 different labour ratios and what each of those means and how to calculate them. And finally, we've tackled a past exam question so that hopefully you guys now know how to answer the labour questions. All that's left for me to say is best of luck with your F2 exam.